Ladies and gentlemen, Tesla stock at the time of recording this video is down about 1/3 today, albeit it has been a volatile day for Tesla. We do have some news to share with you, as always, including about 1 million shares that are being covered today by hedge funds and institutions. Despite the weakness in Tesla, they're actually covering on shorts right now, which I would say is a positive sign considering we have earnings next week. Now, the broader markets today are moving higher marginally. The S&P is up about 1/3%, mainly on rumors that trade deals are going to get done over this weekend. And one of those potential trade deals could be with Italy. Italy's economy minister says that tax policy, including domestic digital levies, is a matter to be discussed with the US at a bilateral, not EU level. And Italy's economy minister says that he plans to meet US Treasury Secretary Bessent at the G20 summit on Tuesday. IMF's managing director, Georgieva, says we're likely going to see more bilateral agreements. He also says we see a global slowdown and need to reduce uncertainty so businesses can plan. He was also asked about rising tensions between the US and China and says, quote, both parties have grievances. He also says it's good to see elements of US pro-growth agendas moving forward. And he says a strong US economy is a stabilizer for the rest of the world. He also says that real economies are functioning and labor markets are quite strong. Also helping to stabilize markets at least a little bit today was TSMC earnings that came out this morning. This headline here says TSMC forecast lifts gloomy mood in chip stocks and tariff worries linger. Taiwan Semiconductor Manufacturing Company, whose customers include Apple and Nvidia, reported better than expected quarterly profit on Thursday and maintained its full-year outlooks on both revenue and capital spending. That was a fear that a lot of us had, that you were going to see companies really not give guidance and just leave it up to kind of the markets to interpret what, sales and profits could look like. But TSMC coming out and giving guidance shows confidence that the semiconductor boom is still alive and well. This article here says Taiwan Semiconductor Manufacturing Company's results reported earlier this morning boosted shares of the Taiwanese chipmaker. CFO Wendell Wong said that demand for its products outside of China is, quote, still really strong. And as we get deeper into earnings season, this will continue to be a big catalyst because at the end of the day, stocks move on for two reasons. They move on emotions in the short term as people try to figure out, what different news headlines mean. But at the end of the day, they move on earnings. And if earnings come in good and we get enough guidance to kind of paint a picture of what this year could look like, in the best or worst case scenarios even, that's a positive. The IMF's managing director says US effective tariff rates have jumped to levels last seen several lifetimes ago. They're referencing the Smoot-Hawley Act, but that was in 1930, and it was not even close to the tariff rates that we're seeing today. Like, if tariffs go into effect how they're written, you will see a global depression, more or less. If not a depression in the US, a severe recession, one that you have never seen before. So is that going to happen? Is Trump going to let that happen? Probably not, because in that kind of environment, you just screw everyone. It doesn't really help your onshoring, goals. Okay, so I'm optimistic trade deals get done. And when we start to get trade deals, markets are going to love that. And effectively, markets are going to bottom and the extent of the selling is going to be over when the US and China start to negotiate. Not even when a deal gets done, but when they start to negotiate is when you're going to see markets really recover. And I think that's coming, but it's going to take some time. And the IMF says they will release an updated outlook next week that includes notable markdowns, but not recession. ECB President Lagarde says EU countermeasures not included in current baseline. So the ECB, essentially Jerome Powell of the European Union, is saying that they don't really think there's going to be retaliation from Europe. Trump and Melania, this is the president of Italy, will discuss tariffs, but visit is not focused on it, according to a U.S. official. They will be discussing defense, energy, and shipping. China's President Xi says trade wars undermine multilateral trading system and disrupt global economic order. China's vice premier said he met with NVIDIA's Jensen Huang. That's interesting. This was one of the biggest headlines of the day today. A senior U.S. official on trade says the U.S. is open, available, and ready to make deals. I would argue as soon as this weekend, you could see multiple deals getting announced, which could obviously be good for next week's trading. Keep in mind, though, tomorrow markets are not open for Good Friday. Mexico's Scheinbaum says the talk with Trump was productive. We will keep dialogue. Chinese Vice Premier He Lefeng welcomes U.S. companies, including NVIDIA, to invest in the Chinese market. That's a good sign for companies that do business in China. You're talking Tesla, Nike, Starbucks, Apple. The last thing you want is the Chinese consumer kind of revolting against U.S. products, because although we don't import a ton of things to China, some companies do have a large presence in China. And ECB President Lagarde says downside risks to economic growth have increased. Fed Williams says today the longer run federal funds rate likely around 3%. And he says the neutral rate is still likely low. Fed Williams says growth this year is likely significantly slower and unemployment will rise. He says that he won't make a prediction about recessions, and he says tariffs will definitely impact inflation this year, but it's unclear how long it will persist. He says it is time to collect data and understand what's going on. He says the monetary policy is well positioned and doesn't need to change rates anytime soon, which that's kind of the same old that we've heard from the Fed over the last couple of weeks. I mean, Jerome Powell basically said the same exact thing yesterday that all other Fed officials have been saying. Just yesterday, when you get thousands and thousands of traders paying attention to every word Powell says, and he says the same old, it hits a little different. It hits the news wires a little different. It's a little bit more affirmative to the Fed's overall stance, and that's what caused yesterday to be an over 2% down day for markets, even though Powell did not say anything new. Nothing Powell said was shocking information, but yet markets took it as, oh crap, we have a problem. On that note, U.S. Treasury Secretary Bessent has cautioned White House officials on attempts to fire Fed Powell. This comes after Donald Trump on Truth Social this morning says, quote, the ECB is expected to cut interest rates for the 7th time, and yet too late. Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another and typical complete mess. Oil prices are down, groceries, even eggs are down, and the USA is getting rich on tariffs. Too late, should have lowered interest rates, like the ECB long ago. But he should certainly lower them now. Powell's termination cannot come fast enough. Look at that. Donald Trump says we will have a deal with China. That's the first time we've kind of heard a positive statement from Trump in regards to a trade deal with China. And it seems like Wall Street likes that news today. Trump says there is no rush to announce trade deals, but he says we will end up with a substantial number for baselines. Trump says we are moving along on trade very well, and that everybody is on his priority list. And Trump says we will make a good deal with China. And here's a headline that is causing markets to move higher. Trump says he's very confident on a trade deal with the European Union. Now, building permits came in better than expected. Housing starts came in weaker than expected, probably something we could have predicted. Initial jobless claims came in at 215,000 versus estimates of around 227,000. So that was like 13,000 better than expected. That's actually a pretty good number, relatively speaking. Now, Philadelphia Fed Manufacturing Index, the headline number came in at negative 26.4. Last month was at 12.5, and the estimate was 2. So that is a huge decline. Business conditions actually went up from 5.6 to 6.9. CapEx index came in at 2. last month was 13.4. Employment came in at 0.2 versus last month at 19.7. Look at this. Philly Fed new orders came in at negative 34.2 versus last month at positive 8.7. That is a crazy flip. Now, Philly Fed prices paid came in at 51.0 versus last month at 48.3. So really weak Philly Fed manufacturing index we got today. Now let's get into some of your Tesla stock news. Just in the time of recording this video, Tesla is now down about 1%, trading at $238 per share. But keep in mind, I'm actually bullish heading into next week's earnings for Tesla, especially if Tesla sells off into earnings like it's kind of sold off the past week or so. Slowly, I will add, compared to the selling that we have seen over the past couple of months. This feels like nothing. I mean, this feels like a low volatility moment for Tesla. It kind of is. But I think people are really not paying attention to the positive things going on at Tesla. New Megapack factory, FSD launching in Mexico and China, Robotaxi coming in June, cheaper, lower priced Teslas supposedly coming in the first half of this year. None of that seems to be like top of mind for investors right now. It seems to be like a show me, prove me kind of thing. Like they don't believe Tesla for whatever reason. Now, the big things that are going to matter is when is the cheaper, lower price Tesla coming? Number one. And number two, we know Robotaxi's coming. I think people understand that. But how fast is the scaling process going to be? Is it going to be fast? Is it going to be slow? Are we expecting more cities than just like 2 this year? Are we going to get 10? Are we going to get 5? What's next year going to look like? Are we going to add 2 cities? Are we going to add 20? Right? That's going to make the difference in how Tesla moves coming next week. But I have to say, I'm optimistic. I think you've hit peak fear in Tesla. I think people are still very fearful. And again, really discounting the positives that are happening in Tesla stock. Tesla has released new images of its Dojo supercomputer cluster that was designed in-house. Look how badass these look. Actually incredible. Tesla has also added improvements to its tow mode and tire service. Also in the news today, Swedish unions are upset after Tesla opens 2 new superchargers. Hyundai plans to temporarily suspend production of some of its electric vehicles in South Korea due to slow demand and US tariffs. Tesla is now offering new Cybertruck inventory discounts in the US of up to $10,550 off, up from $6,000 before. Non-Foundation Series 2024 model years up to $10,550 off. Foundation Series 2024 model years up to $10,000 off. Anyone who purchases a new Cybertruck Foundation Series also gets free lifetime supercharging in addition to these inventory discounts. Note, these discounted trucks are not demo vehicles. Additionally, 2025 model year Cybertrucks that currently do qualify for the federal $7,500 EV credit do not offer any inventory discounts. And here are the top 7 voted questions by investors so far for Tesla's Q1 earnings call next Tuesday. We'll look at the top 3. Those are the ones that Tesla usually answers. Number 1, when will FSD unsupervised be available for personal use on personally owned cars? Number 2, is Tesla still on track for releasing, quote, more affordable models this year? Or will you be focused on simplified versions to enhance affordability similar to the rear-wheel drive Cybertruck? That's a big question, huge question. How Tesla answers that could determine what happens to Tesla stock on Tuesday. Number 3, how is Tesla positioning itself to flexibly adapt to global economic risks in the form of tariffs, political biases, etc.? Number 5, I think, is also a big question if they answer it. It says, did Tesla experience any meaningful changes in order flow rates in Q1 related to all of the rumors of brand damage? That would be a big question if they answer it, but they usually only answer the top 3 or so. Tesla has a new job posting for a robotaxi diagnostics engineer in Austin, Texas. It says, quote, Tesla is seeking a diagnostics engineer to enhance diagnostics and repair of driverless vehicles used as robotaxis, working on site at our mission control and operations hub. Option activity today for Tesla is a little bit more positive than we've seen in prior days. You have 54 different trades totaling $40.83 million with a positive order value of 58%. If we take a look at what the short sellers are doing today, about 977,000 shares are being covered on. This brings the short interest of free float down to 2.74%. That is down from almost 3% recently. That may not seem like a big deal, but there's 3.3 billion shares outstanding. So that's quite a bit. That's going from like 82 million shares sold short down to where you are now at about 75 million shares sold short. So it is like 7 million shares or so that have been covered on in just the last couple of days. That is a pretty good sign. The hedge funds and institutions, they don't want to be exposed to the downside in Tesla anymore. And I mean, the stock's already down 50% from all-time highs, a little bit more than that today. Do you really want to keep betting on that downside? At some point, the risk reward just becomes not great. Google Trends data for Tesla continues to slip a bit. Not uncommon during this time of the year, I will say. Cybertruck at 13, Model Y at 17, Model 3 at 15, Model S at 7, and the Model X at 4. Global inventory numbers for Tesla continue to be very low. The Model Y coming in at 1,200, Model S at 1,400, Cybertruck at 2,300, Model X at 2,600, and the Model 3 at about 4,000. And Tesla continues to run about 2,000 different ads with Google. The CNN Fear and Greed Index today is coming in at 19, which is in extreme fear. All of your categories are in extreme fear besides market volatility, that is neutral, and junk bond demand, which is in fear. Safe haven demand, put and call options, stock price strength, stock price breadth, and market momentum are all in extreme fear. We did get a new AI investor sentiment survey today that really didn't move too much. Bullish investors actually fell from last week's 28.5% down to 25.4%. Neutral investors rose from 12.5% to 17.7%. And bearish investors fell a little bit from 58.9% to 56.9%. So not a whole lot of movement here as far as sentiment is concerned. So let me know what you guys think about all of this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.